do you have any intel in terms of how the negotiation is going with the Chinese side? What is on the table? And do you feel like there is actual urgency coming from both sides to reach a deal?
We have seen that there are negotiations ongoing, and what we saw coming out overnight is that there was a marginal lowering after consultations with the Chinese partners in Brussels. That resulted in a small reduction in the tariff level. So yes, negotiations are ongoing, and of course for China, it is a matter of some urgency that this is being addressed and that the barriers for access to the European markets remain low. On the European side, of course, there is a memory of China itself having had high tariffs on imports from Europe on automotive, 25% when China acceded to the WTO in 2001, and a requirement that if you are manufacturing in China, you have to hand 51% of your equity in that manufacturing plant over to the Chinese side. So there is a little bit of historical memory there also that tariffs ought not to be all that new to the Chinese side, and considering also the Chinese emphasis on self-reliance, that it cuts both ways. At the same time, I think that there is a little bit frustration on the Chinese side. China bristles at the idea that China is not playing fair somehow, and I'm perhaps also struggling. What is it Europe really wants in order for these tariffs to go away? So I think that's pretty much where we are today.
We're talking about import tariffs on Chinese EVs only, but the EU side has been pointing out asymmetry in the commercial relationship with China. Do you think the EU will have to, find it elsewhere beyond EVs and come up with similar actions beyond EVs?
I think right now there is considerable frustration in Europe with a trading relationship that is becoming increasingly unbalanced. We have seen considerable deflation, producer price deflation now for 23 months running. That means that you can stuff more goods in the containers when you export. So what we actually see is that the discrepancy in the trade balance in volume terms is continuing to increase. If you go back 6 years, for example, to 2017, the Chinese economy has perhaps grown 35–40% since then. But in absolute terms, European exports to China are actually down. And that is, of course, what is puzzling regulators in Europe. How can it be that you have a large economy like the Chinese that grows so fast, 35–40%, and then you have a decline actually in volume terms of European exports? So something seems to be wrong. And at the same time, Chinese exports to Europe continue to increase. And that is, of course, gives rise to some concern in Europe. How's this going to end? And where does it leave European industry? Are we seeing now an accelerated deindustrialization because overcapacity now is increasingly being offloaded in Europe? And these are some of the things that also needs to be addressed. What kind of relationship is it really that Europe and China should have going forward?
Yes. Jens, and Mario Draghi has touched on this with the Draghi report and is advocating root and branch industrial reform. Does it feel that your members are in a perfect storm at the moment, because there seem to be protectionist sentiment rising? However you slice it, there's the lack of a level playing field, as you pointed out, within China. There's slower growth prospects within China as well. Does this mean that your members are reluctant to commit capital to this market?
Yeah. Let's just take a look at the figures, because there's nothing in the figures that sort of tells us that we are looking at deglobalization. Indeed, there are estimates that or not estimates, now it's a fact that when you look at container transport, for example, in the second quarter, we are looking at 5–6–7% increase, about twice as fast as the growth in the global economy. So global trade is actually doing pretty okay, and in particular Chinese exports. So yes, there is a lot of tension, but we also actually see that trade this year has been growing pretty fast. But you are right, there is a little bit of a perfect storm for our members right now, because what we see is persistent weakness in the Chinese economy, in particular on the demand side. And that means a lot of our members, they are being pressured on their margins. They are building up inventories, and they have to increasingly shift to export rather than the domestic market.